93% of companies are reevaluating their contact center technology because legacy solutions no longer work. Glia isn't just fixing old problems, we're creating new possibilities for the AI era.
Before we get started, a quick word from our sponsor, Community Financial's President CEO Tansley Stern's podcast, Despite Impossible. Now on to the show. On the show today, we have Great Lake Credit Union's very own Elizabeth Osborne and Janusea's very own David Whitcomb. They are both here talking about how Great Lakes and Janusea have worked together on a recent branch acquisition and how they approached this project with other partners involved as well, the overall strategy for making a huge success. So check it out. Hey everybody, Mike Lawson here with CU Broadcast. Welcome back to our show. And as you can see, we're going to have a one heck of an episode today because we have two really cool guests here in our virtual studios right next to us. You might recognize her, Elizabeth Osborne from Great Lakes Credit Union in the fine state of Illinois. How are you, Elizabeth?
You got it. Yes, good. How are you? Thanks for having me.
Doing great. Always great to have you here. And then right below us is Janusea's very own David Whitcomb. David, how are you, sir? Good to see you.
Great, doing great. Thanks for having me.
Good. Oh, you're welcome. You're welcome. Yeah, great that you guys are both here because we're talking about how your two organizations have worked together on a recent branch acquisition and how you guys have approached the overall strategy to make this a success. So I'm really enjoying stories like this, especially from the credit union perspective. So thank you again, Elizabeth, for being here. But to kind of set the table here, Elizabeth, can you tell us about this branch acquisition and how you guys approach the overall strategy to make it a success, including how you guys thought about the member conversion as part of that as well?
Absolutely.
All right.
So M&A is a hot topic, right? It's been a hot topic. It is a strategy leader for many institutions for years, and it continues to be. So I think this will continue in the future. So last year, we were presented with a unique opportunity. So Great Lakes Credit Union was presented with an opportunity to purchase a branch. So truly an acquisition, not a merger. You see a lot of mergers happening.
Yes.
Where full institutions pulled together. This was a Vibrant Credit Union, one of our neighbors here in Illinois, was looking to sell their branch that's about 2.5 hours south of Chicago. And with that, they also presented 6 counties. And that was just such a great opportunity for us. So it gave us a chance to expand our field of membership in Illinois, as well as expand into Indiana, which is something we've been looking to do.
Okay.
So we jumped on that opportunity, and very quickly, I got on the phone to our partners at Janusea, new partners at Datava, and also at Pure IT, because we tend to approach a lot of challenges together to say, hey, we have this project or this goal we want to meet. Can you help us get there?
Yeah.
And so we were able to do that. And so this acquisition, because it's so different, we knew we couldn't do what we've done before. Mm-hmm. And so we were able to brainstorm a very streamlined and efficient process, which we called a proof of concept, which we have now proven, and really helped us to be successful. It's a great story to share.
Now, before we go on, Elizabeth, I just have one little offshoot question here. Is this a common practice for credit unions to purchase just one particular branch, or is this pretty unique?
You know, I would say it happens. It definitely occurs. Yeah. You're seeing, we've had opportunities both with banks to purchase bank branches, as well as credit union branches. And I think this will continue in the industry because as financial institutions rethink their markets and where they need a physical presence versus maybe a digital presence would be more appropriate. I would envision this should continue.
Yeah. Instead of taking on the entire credit union, how about that branch and that area that surrounds it? So good move on you guys for sure. So, and I'm sticking with you one more time here, Elizabeth here. So what were some of the typical challenges you guys expected with a project like this? And based on the past experiences that you guys have been through that you just mentioned?
Yeah. So we had recently, before this, completed a merger. And with so I have a fantastic project management office. That team is a bunch of rock stars, and they developed a repeatable process for mergers. Ooh. It was a full program with project tracks. It's really helped us be successful with the merger. Right. But with this, we knew because it's so different, we had to rethink critical components, such as programming, right? We can't it isn't really a conversion. It's a stop, start new. And then also with an acquisition, it's as if every member of that branch left their financial institution, so left Vibrant one evening, overnight, became members with new accounts at Great Lakes Credit Union. There's no overlap. And so we knew we needed to focus on communication with members to drive action prior to cutover, and to really think about, okay, how do we address these challenges with Janusea? And they were able to, through this process, give us access to like account numbers a month before cutover, so we could start that communication with members to drive action as soon as possible.
Gotcha. Yeah. So yeah, it's really cool stuff here. I love, and yeah, this is stuff we don't talk about every day. So it's really cool. But like you said, I think it's going to be happening more and more often as the time goes on. So David, you're up, sir. So what are your thoughts on this project with Great Lakes Credit Union and the uniqueness of it? And has this been? I mean, obviously pretty unique to you guys as well. So what are your thoughts here?
So I think when I first heard of the project was happening, and I was asked to kind of step in and lead it on our side, my first thought was really emotional. I was kind of excited. So I'd been a part of a core conversion at a credit union I worked for a decade. I'd done online banking conversions. I'd built online banking mobile apps. So I'd seen a lot of things. I worked for Fiserv, where I was a part of digital banking transformation projects and core conversion projects. So I'd seen all that stuff a lot of times. But to have a core acquisition or a branch acquisition was different enough that I was like, okay, this is different. It pulls together some pieces of my background, but then also takes Janusea's technology and gave us opportunities to really leverage everything we've been building and doing for something new and novel in the industry. Opening accounts is not new. Creating name records or creating users on a core is not new, but putting it all together in a way that can be more efficient, be more precise, have lower levels of risk, that was an innovative process and partnership that was really innovative through this project. So it was super exciting and really, really fun to get to engage it.
Well, I'm sticking with the uniqueness theme here because, David, again, coming back to you here. So how did the two organizations come together and approach this project to set it up for success? Because obviously this is kind of setting the table for future stuff too.
So I almost you say two partners, but really I almost look at this as a 5-partner project.
Oh, wow.
It's Great Lakes.
Yeah.
And Janusea were two majors. Datavo was an essential partner from wrangling data from a different core system that had a different organizing orientation than Scimitar does. But then we also had Jack Henry, so GLC partners with Jack Henry, and so for core connectivity, like we had to engage Jack Henry consistently and continually with questions and getting test cores set up and cleansed and reset. So there were a number, and we can't forget that Vibrant Credit Union was also played a role because it was their data that had to be converted.
Were they on the same core as well? Were they?
No.
Oh, different core. Oh, God.
No.
DNA.
That's the thing. This was a DNA core. Yeah. Okay. So a person-centric core to an account-centric core, if you know what that means in credit union land.
Oh, yeah.
It's a big difference. And so that conversion process took a lot of data analysis just to get to step one. So again, there was a lot of complexity. It wasn't just 2 partners. It was really a 5-partner project. And I think when you talk about management of the partners, Elizabeth talking about her project management team, she's not joking. They are rock stars. They know so I think first, they know their credit union in and out. They've all played different roles. They've all been there for, I want to say over 10 years each from, if I remember right. And they know where the bodies are buried. They know where to dig them up if they need to. They know all the pieces of Great Lakes. And so anytime we had a question, if they didn't know the answer within 5 minutes, they had it within 10.
Wow.
And so that skill set for a project management team is invaluable because not only can they organize the steps, they can also get the answers when you need them. And that's pretty unique. I mean, Elizabeth has owned a great team.
Well, it just shows you how the importance of a 2-way street is when these two organizations, well, actually, maybe in this case, a 5-way street. So with everyone having to communicate and step up and do their part. And having said that, Elizabeth, what's the initial goal of this project? Did you guys achieve that said goal as well? I'm kind of jumping ahead a little bit here.
Yeah. Yeah, absolutely. So for every project, even outside of mergers and acquisitions, we set very clear goals, objectives, and KPIs. For mergers and acquisitions, something we introduced last year is a focus on member retention, because that is truly such a great indicator of whether or not you did the work you should do to make it as streamlined and seamless and stress-free as possible for those members, so they want to stay with your institution.
Right.
Because you're talking about something that's very close to each member. This is their finances. This is where their deposits go. This is how they pay for groceries. And so it's so important to make sure that you get that right. And so we measure member retention 60 days post-close. So we're a day short, but I would be shocked if this number changes in one day. So we set a goal.
We're at 59, Elizabeth?
So we set a goal 80%, at least 80% member retention, which I thought was we could do better than that, but let's start with 80. I'm thrilled to report we're at 96% member retention.
Well done.
Yeah. So one day to go, but I think we're looking good. And but this is, especially with this particular branch is located, it's a more rural market, and so we found they're much more traditional banking members. They tend to go into a branch.
Right.
This is typically their primary financial institution. So what a fantastic opportunity for us at Great Lakes to share our products and services, and to help improve their livelihood and to give them better products. But also, holy moly, that means this is a big event for them, and you could easily tick people off, right? So we did not want that to happen. And so that goal is a big driver. That's actually part of what we track with our scorecard at GLCU as well. So hats off to the team. Janusea Datava PRIT made that happen along with Jack Henry and also our partners at Vibrant. But that was very clear. And then also time. We had a cutover weekend. We received our last files from Vibrant the evening of the 28th into the early morning of the 1st, March 1st. And we received what we needed. And we had a team here at Great Lakes Credit Union that came in, reviewed, analyzed, and verified everything came over successfully. We proved out the programming was successful, as we had tested many, many times.
Oh yeah, test.
And so we were able to cut over on time and per our communication with members. That was a huge one.
Okay, having said all of that and all these moving parts in the background with David and his team at Janusea, PRIT, all the folks that we've mentioned here, for the member, this was pretty seamless, right? I mean, did they notice was anything besides the name change or that type of stuff? But as far as banking operations go from the member's perspective, pretty seamless, I'm assuming, right?
So I will tell you that a branch acquisition is the highest impact you could ever have on your members.
Okay.
And it's not in a good way, because you were unable to transition prior activity. Because if you think about it, Vibrant is still an operating entity. They still have a core system. They have members that bank with them.
Yeah.
So for an acquisition, they have to slice off this grouping, then share their information that we then, David had spoken to us, they had to open up brand new accounts for every single member, and so every single membership and the accounts associated with it, a brand new debit card, the brand new routing number. You're not able to retain the routing number. So then trailing activities are delayed. So ACH payments and credits. So it's very impactful. So when I spoke of the need for really timely communication that drove action, that was done throughout the month of February, primarily in person. We used a checklist that our member-facing teams shared with our new members saying, hey, just want to make sure you're aware, we are soon going to be Great Lakes Credit Union. This is your new account number. And they'd write it in or give them a Post-it with their new account number so they could start transitioning direct deposits for that date. So there was a lot of preemptive work that had to be accomplished to make it as seamless as possible.
Wow.
Yeah.
Oh, so many moving parts. But having said all this, having that 96, what was it, 96% or whatever you said, that number is phenomenal. That makes that number even more special based on what you just said. Oh my gosh. So David, from the Janusea side, what lessons did you guys learn along the way that might help inform or help these types of projects be handled in the future?
Well, I think the first we talked about a lot already is people matter, and good people make a massive difference. I think our team has I think we have over 100 years of experience in 3 or 4 people. And so like that banking knowledge and experience goes a long way when you're working with banks and credit unions and around banking experiences and banking technology. And you have Elizabeth's team who had, they know their credit union and they know how everything works and they know who to talk to. So having those people is priceless when it comes to a project like this. I think what we haven't really discussed much, and I'll get back to the takeaways, this wasn't like a 6-month project. This was an in earnest 2 months, 2.5 months.
Very short.
Through November and December, the holiday season, where people were taking a week off here and there. So this was not a 12-month project. This was a 2 to 3 month high-speed execution. Like when I say people matter in that context, the ability to execute fast and know what you're doing made a huge difference. I think we had that across our teams, and that was a huge benefit. I think the other part is knowing timelines and then being able to move from timelines to very, very clear requirements. There was when we realized that GLC wanted to issue debit cards essentially a month before the conversion, or at least when Elizabeth mentioned creating accounts and creating deposits, we essentially had to be done with all deposit conversion about 30 days ahead of time, which meant that of that 2.5 months, we were a month and a half to lock down deposits.
Oh my God.
So when we would review timelines, at least, I think we reviewed it every week through end of November, December. And at some point it's like, hey, we have to lock down times.
Yeah.
What are the requirements? And when we started stepping back from go live date, what do we have to do? What do we have to do? What's required? When that debit card issuance item came up, we had to set aside everything loan related and focus on, okay, we have to get all accounts that have a debit card tied to them created so that we can issue debit cards. So that was that focus helped us just knock that out. And I think fortunately, deposit accounts are a little easier to build on our side technologically than a loan account. So we were able to push loans back a little bit, focus on the debit card accounts, and it worked. We hit the timeline. I think we may have been a week late, but we found a little room to wiggle.
We had some buffer.
That's a good thing.
So I think, but we aligned as a team. I think, again, going back to Elizabeth's project management team, I've never seen a project work so well with risk management either, where everyone came to the table, would say, okay, like I came at one point saying, for this part of the project, we would be moving to a high-risk area in an unproven part of Janusea's technology, and I'm not comfortable with the time we have to test to prove it. And so GLC team was able to take that away and say, okay, we talked to our finance team in this case. They're happy to use I think it was the merger process to run the books and fund the accounts and do all the distribution. So that's fantastic. That means that we can stay focused on the loan portion now. We don't have to jump to that and distract ourselves. Mm-hmm. And that allows us to move with a lower level of risk and continue to maintain that timeline. So that, again, this is one of the best projects I've ever been a part of, just from an execution, partnership, and over, the approach of the teams was wonderful too. Well, it was a really great atmosphere. Well,
and going back to the uniqueness of this project as well, it says a lot of all the teams working together, cohesively. So yeah, and Elizabeth, same question to you is real quickly, any lessons learned from the credit union side, because it sounds like this might be something that could happen again down the road somewhere. So in the near future, so what lessons did you guys learn real quickly?
Yeah, so I'd say thinking especially about our partnership with Janusea, doing our best early on with future potential acquisitions or mergers is providing and gaining direct access to the other financial institutions' core. Because that gives you so much more flexibility and insight into their data structure and their membership structure. That was one of the challenges here, is that with Vibrant, they were Fiserv DNA on-prem, and so they were having to cut files and reports for us and then send it over. And then we're like, okay, but we can't like log in and see it all. With Janusea, you're able to see such a broader picture that really gives you that insight that's so needed. So that was one of our takeaways and lessons learned, to say, okay, if you can, make sure that you're partnering with someone like a Janusea who has connections. What do you have, 12 cores now or 15 cores?
At least?
Yeah, I think 13, 15.
Yeah, so I was like, I think it's at least 12. I know that. So if you have that opportunity and they already have that integration, that connection, leverage that.
Yeah.
It's going to make it a lot simpler and cleaner from a data quality perspective.
Okay. Yeah, and then David's experience with Fiserv already, that kind of helped out a little bit too, I would assume, right?
I know I've learned a lot in my career in financial services. I'll say that. Like, and again, Janusea is a team.
Oh, for sure. Yeah, I'm just throwing that out.
Worked with DNA, worked with XP2, worked with a broad set of Fiserv cores, with Finastra cores, with FIS cores, with Jack Henry cores. We've had people who've seen a little bit of everything. Correlation. We've seen almost everything at this point.
Yeah, just wanted to mention that real quick. All right, kind of a segue here, guys. What's next for these two organizations? Obviously, is there continued tweaking going on here? Continued, evolution. What are some, what's next for these two organizations? What do you guys have any plans for the future here, David? Anything you want to reveal? I don't want to reveal anything top secret, but what's next for you guys?
So I know with GLCU right now, we do have a mortgage servicing integration that we're working on to help them work with a mortgage servicer and get essentially external loan migrated into the core and have them updating on a consistent basis. So that's being done through our Janusea platform. So that's one project specifically with GLCU. I think in general, the project with Great Lakes did help us expand our loan functionality within Scimitar. And so one of our steps is to take that loan functionality and expand it to our integrations as well, so that we can do a more thorough loan onboarding process. And also we have a large project around IRAs and HSA accounts. So creation and maintenance of those accounts that we're expanding, again, not just Scimitar, but to our 15 cores. And we'll be going to probably 20 to 25 cores by the early next year of this project. So it's exciting.
Elizabeth, do you guys at Great Lakes, do you guys sleep? You got so much,
no, they don't.
So much on the docket here. My God.
Sleep is elusive. No, I'm just kidding. Janusea is so integral to our long-term integration strategy. So anytime any fintech talks to me, they'll tell you. I'm always like, are you integrated with Janusea? Because they're truly like our API managed service provider. Think about like that. Simply state. That's just because Kyle and I always talk about like API is like the new 4-letter word, because a fintech be like, oh, it's just an API. Well, that's a huge strain on your technology team. So use a partner like Janusea to help you make that happen. And then with Datava and Pure IT, they help get you there and give you those insights. But yeah, they're great partners. We will continue to expand our relationship with them. And Illinois has a lot of credit unions in need. Whether it's a need that they are looking to merge or need maybe selling off a branch, we plan to continue to prove out this process. And M&A is part of our future strategy as well. Yeah.
Well, it sounds like you guys set the template quite nicely here for future projects down the road here. All right, last question, because I know you guys got to get back to work. I don't want to monopolize your time too much here. But what do you think this means for the credit union industry as a whole? Kind of, yes, because I think this really, again, goes back to my setting the template statement there, because I really think this really sets the stage for other credit unions. Obviously, what you guys are doing at Great Lakes, Elizabeth. Yeah. So what do you think this means for the rest of the credit union industry out there looking at this?
So prior to credit union, so this is my first credit union, Great Lakes Credit Union, I worked in banks for years. Mm-hmm. And the approach we used back then, 10 plus years ago, for conversions, data conversions, is the same approach financial institutions are using today. So I think this proof of concept allowed us to really think, how can we accomplish an acquisition or merger faster, cleaner, more accurately, that also with Janusea allows us to no longer be as beholden to timeline. So a lot of our core providers, they're great providers, but they have a long backlog of customers that need to convert either on or off. And there's only so many resources. So many of them are saying, hey, in 18 months, we can help you. 18 months. So in the meantime, I have to run all these systems at the has a cost. There's risk with that. And so we've got to think better and bigger and big picture. And so partners like Janusea, Datava, and Pure IT are what I see is really opening up the door for us to make that happen.
Yeah, make it happen faster too, because we all know in the world of fintech, speed is the name of the game for sure. So, or one of the names in the games here. And David, same question to you. I mean, what do you think this means for the rest of the industry moving forward? Because what you guys did here, because it sounds like you guys really set the table here nicely for future projects in this area.
Well, I think it lowers the bar of entry for something like what Great Lakes just did. So if Great Lakes is able to do, if again, but 2 to 3 months is ridiculously fast to execute the project this. So if we can do that in 2 to 3 months, even if you're inexperienced, there's a 6-month time frame within the window of execution for a credit union. It might be, and if the 12 to 18 month window is scaring you, we cut that to a third of that timeline from 18 months to 6 months. Is it more approachable now? Can you change your strategy? Can you look at M&A a little more aggressively because your costs have decreased, your timelines have decreased, and your impact to your financials will improve quickly when you start doing things like that. So I think that really is a significant impact when we look at the industry. I think from Janusea overall, all the things that we built for GLCU through this process are also available to our platform. So a lot of our other customers, when they say, hey, we need to do this and this with a loan or this with an account, we can say, I get to look at my portfolio and say, okay, well, actually, we have almost all of that done, or we have all of that done, and you get these things to go with it because of the work we did with GLCU. So that's how Janusea operates. When we're building things with our clients, it goes into our platform, and those tools are now available. So in that normalized layer, it goes beyond just acquisition. It's loan origination, account opening, it's account maintenance, it's loan servicing, it's all of those money movement and transfers. Those are all available through our platform. And so when you think about it as a tool to do an merger and acquisition, and then a facilitator, the way Elizabeth is seeing it, to really bring in fintechs to create a normalized consumption layer, suddenly that consistency in delivery allows you to accelerate innovation as well. And so that's where we're seeing accelerate is they're really able to innovate faster, both in their M&A strategy side, but also in their technology adoption. It's working on both sides.
Yeah. I see this helping credit unions really compete with the bigger financial institutions out there as well. Being able to move this fast, and open up the doors, so to speak, to new membership. So yeah, this is really cool stuff here. All right, guys. Well, I'm going to let you guys get back to work. Thank you so much for your insights and all the takeaways and this really, really cool project here that I think might get even faster than 2 months down the road. The more of these you do, I have a feeling. So, because it's just going to get better and better. So yeah, really exciting news for the industry. So yeah, really excited to get this one out there and share it with more folks out there. So congrats on the success already, even though we're at 59 days, Elizabeth. So we got one more day to go. So I think you guys knocked it out of the park. Well done.
Thank you, Mike.
Thanks, Michael.
David.
A quick word from our sponsor, Community Financial's President CEO Tansley Stern's new podcast, Despite Impossible.
93% of companies are reevaluating their contact center technology because legacy solutions no longer work. Glia isn't just fixing old problems, we're creating new possibilities for the AI era.